You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live every Friday at 3 p.m. Central, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by QuickStrike, options pricing and analysis software. QuickStrike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. QuickStrike has you covered, with market data reports ranging from open interest to the term structure of volatility. QuickStrike is the perfect addition to your trading toolkit. Learn more about QuickStrike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QUIKSTRIKE1. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
I feel the funk in my blood from that funky tune. Yes, it's time for This Week in Futures Options, a program here on the old Options Insider Radio Network where we break down all of the amazing activity that is lighting up in the world of futures options this week. My name is Mark Longo from theoptionsinsider.com, as well as from a little thing we like to call the Options Insider Radio Network. Quite a few new programs. This makes number 14, actually, on the network. And where can you find all of the great back episodes? Maybe you're saying, hey, what did they talk about with soybeans last week, or what was going on with crude a couple weeks ago? We can find all of that at the mothership, the flagship, theoptionsinsider.com. Probably the easiest place to find all of our back episodes. Of course, you can always find them iTunes, TuneIn, Stitcher, wherever you hang your hat on the podcast side. We don't take sides. We just put our content out everywhere and let you guys get it wherever you want, including also via our mobile app. Some people mentioned they couldn't get the TWIFO on the mobile app for some of the Androids. I'm going to check in to make sure, see why that is, and make sure you guys can all get it via the app as well. If you have issues with that, let us know. We'll see if we can fix it for you. And of course, while you're listening via the app or wherever you like to listen, make sure you send us your questions, your comments, your feedback, your nuggets of wisdom to share with us, as well as with your fellow listeners. We'd love to hear from you guys. And joining me on the old program today, my futures options compatriot, you know him, you love him, the founder of Bantix Technologies and the creator of a little platform we love around here called QuickStrike, Mr. Nick Howard. Nick, welcome back to This Week in Futures Options, sir.
Hey, good to be back again. I think there's some good stuff to talk about this week. We even can revisit our crazy trade of the week. Since we dropped the ball last week, there wasn't too much crazy going on, but I think we have some good stuff this time.
Yeah, looking pretty good, looking pretty crazy. Yeah, you're right. We were so busy last week doing other stuff that it kind of it just we didn't have time, quite frankly, for the crazy trade. We'll see if we can get it off this week. But that said, it's interesting. It's kind of an interesting week to be doing this, Nick, because there's a lot on the radar coming up next week, and so a lot of people are kind of wondering how that's going to impact what's going on, what we're seeing out there in the space. Let's start a little bit closer to home with FOMC. There's, of course, Brexit, but that's a little bit farther down the road. We'll stay nearer. Of course, we got Miss Yellen and her crew popping their heads out of their hidey hole again next week on the 15th. And so we'll have to see, of course, it's a couple-day meeting there, but we should know by the 15th. And then, of course, we talked on the last week's show, the non-farms number, pretty pathetic, all things considered. But Miss Yellen did talk again this week, because when does she not like to talk? And she did say that they're kind of reviewing that number, but it didn't seem like they really took it that seriously. It seemed like they were still kind of on their track of wanting to raise, but I don't think they have any arrows in their quiver at this point for a June raise. Maybe beyond, maybe July. The July probability over there at the Fed Watch is still a little bit higher. Obviously, what they're pricing in for Fed funds with June is pretty much non-existent at this point. It was sub 5%, sub 4%, I believe, even at this point. So pretty low coming in to this week. Let's pull up the exact numbers. The July is it's a little bit less than a quarter now, about 21%. They're pricing in for Fed funds over there via our friends over there at CME and their fun Fed Watch tool. If you haven't played around with that, search for that yourself, listeners, over there on the old Google, and you can play around with those numbers for yourself. But we saw a lot of interesting stuff lighting it off. I know you were looking at some, maybe this would be our crazy trade of the week, some stupids and some other fun stuff going out there in the rates space. Let's start there, Nick, because that's obviously where a lot of this FOMC impact is going to be felt. What's been catching your eye out there? Let's start in your old stomping grounds, a Eurodollar.
Yeah, so I was taking a look here, and you and I talked a little bit about it last week after that pretty poor non-farm payroll numbers, although I did start to see some things, how there were going to be some adjustments, and there was some statistic out there that every time in May is always gets readjusted up. So, but I think that's a little too late for the FOMC meeting decision, unless they already have those numbers, which is more than likely they do. I'm sure they have everything at their disposal, but I would tend to say, based on some of the stuff they're seeing here in particular. So if you look at TWIFO and you go out on the CME site and you are on the default page for the This Week in Eurodollar options, you're going to see something interesting between the July and the August, and you're going to see a big shift in open interest in the puts from there's a downshift in the July puts and a high open in the August puts. So that would tend to make me think that people are sort of rolling out of July and into August, because July will not encompass the next meeting. August will. So if there's any chance, I think people are starting to look at, I'm going to make the play. Nothing's going to happen here, and we're going to see more of a chance of a tightening in the later part of the summer, right? So that's probably a pretty good indication. Again, without being down there, without seeing exactly or talking to people about what they think, but given where the Fed Watch is, given how this trade is, when you see a big roll like this, especially July's got 35 days to expiration, but the funny thing about these Eurodollar options is a lot of times you have an option just miss the FOMC meetings, and it's really kind of a bummer because those are the cheaper ones, right? You'd get the shorter dated ones; they would be the cheaper options. You'd be able to get your play in there, and there are no weeklies on the front month contract, so there's no way to sort of sneak in there and get on the board inside that month to month, right? The serial to serial. So my guess would be that they're going to not do anything. Probably keep their bullets for the next time. And I think if things go really well with the numbers and they're seeing good things in the economy, they've been pretty steady with their, incremental quarter points and stuff like that. But if it got really strong, you might see a bigger one come the next time around. So it'll be interesting to watch. And just looking at the futures too, we were up, we stayed up. It was a little bit of a pullback earlier in the week, but this week we ended up for the week. And when you see that kind of stuff, I think that it tends to make me think that we're not going to see much in terms of them doing anything coming up here on this. I believe it's Tuesday, Wednesday, 2-day meeting, something like
Tuesday,
that.
Wednesday, yeah.
Yeah.
Interesting stuff. I know we were highlighting here, and we kind of we didn't hit on it last week, so maybe we'll do it early this week because I think that we have a contender for our crazy trade of the week. We saw other couple of fun ones, but this one certainly seems like it might be leading the charge this week. Anything stupid always raises my my ire, Nick, because I'm not a huge stupid fan. Not a lot of use cases I really see for them, except for a couple which we've discussed ad nauseum over there on our Option Block program, if you are indeed so inclined to check out our myriad debates on the pros and mostly cons of the stupid. I think they're a very aptly named strategy. But that said, you did see, looks like a par call stupid going up out here in the old euro dollar. I'll let you walk our listeners through this because these ticks and everything else will probably blow their minds. But you used to be out in the euro dollars, so I think you speak ED more fluently than most.
Yeah. So what's interesting is these calls were out on the curve, right? So you've heard us talk about the white part of the curve, which is the first year, right? From now for a year. And then there's the red part of the curve, which is a year from now and then for another year, right? So what we saw was the September and December par calls. That's the 100 strike. That's basically a zero interest rate. Those have 465 and 556 days to expiration respectively, okay? So that's a lot of time. And you would think, I guess you can't really think. We saw these go up. They traded on 2 days. So it wasn't just 1 day, it was 2 days. So there was about a 9,000 lot on day one and about an 8,000 lot on day two. Those were both openings. There are par calls that are open and other expirations when things were sort of sketchy and they're still out there in the trading. But, generally as you move in less expiration, those things are cheap, a half a tick or a cab or half a cab, those will trade. But this stupid traded for 4.5 ticks. Okay. So a tick is worth $25. So 4.5 ticks is $112. So you got $112 times around 18,000 contracts, right? So what do we got? 18, 1, 2, 3 times, so holy cow, is that right? $2 million. That's a big trade, right?
That's a hefty trade.
That's a hefty trade. So that's way out there on the curve. So they're, like I said, they're a year and a half, almost 2 years out, 4.5 ticks. Got to be closer things that you can do. So a lot of times when you see that kind of stuff, you want to think it's a cover against something they did better somewhere else, but you just never know. So for me, that's a crazy trade of the week. And I'm sure, like we said before, maybe not on this show, but on other shows, I'm sure people were falling all over themselves to do that trade because that's an easy trade to hedge. And especially if there's because we're not going to shoot up there right away, even if they do absolutely nothing, things got to fall apart pretty good. So that's one of those where you put it in there, you keep an eye on it, and then you gradually either reel it in as people start to offer it. If somebody comes in to sell it because, paper might come in behind paper to try to get on board with it as well, and try to go down below. But I had them theoretically worth 3 3/4. At the end of the day, they traded for 4 and 4.5. So already there's some vol gain there. And that's one I think that a lot of people would want to jump on.
Yeah, well, speaking of jumping on, I forgot to mention at the top of the show, if you guys are available, we stream the show live every Friday, 3 p.m. Central, 4 p.m. Eastern. Join us via the Mixlr app, MIXLR. You can get it on the web as well. We tweet out the links, so if you're following us on social media, you'll find it there as well. And a lot of you guys piling in and out, asking some good questions, sending good comments, hearting our stuff, including out there. Dunedin, I love that handle. I've seen it popped in a few times in our chat room before. I love that. Hopefully, as a Tolkien reference. If it is, it's right up my alley. If not, let's just pretend it is because it's really cool. Either way, he's liking what you're selling over there on the Eurodollar put stupids there, Nick. So let's see if we can keep the love rolling for our listeners. Let's move on to another area that's rocking and rolling of late and kind of near and dear to the hearts of a lot of people out there in the market right now. Not an area we touch on that much, quite frankly, but of course, past FOMC. I know it's hard to look past FOMC, but you go down one bridge and over to the next one there, Nick, and we've got Brexit on the 23rd, of course, the notion of will Britain finally leave the Eurozone, abandon the Euro, all that other fun stuff. Seems like some early polling this week, Nick, seemed to really lend some some fire to the smoke. It seemed like the majority of the respondents in that poll were leaning towards leaving rather than staying. So that, of course, sent the market into a tizzy earlier this week. We've been looking at a lot of stuff out there as a result. Let's pull up what's cooking up via the Quick Strike platform. Let's go. Or, of course, you can use that link. We should mention it to you before. It's cmegroup.com/TWIO, TWIO. I know they don't use TWIFO. We've talked to them about it. They're fixing it. But for now, it's TWIO, this week in options. Case sensitive for whatever reason, so make sure you do lowercase. Nick and I were joking before the show. We didn't think that was still possible on the web, but apparently it is over there with our friends at CME. They use some, let's say old school programming methods on their website. So FX Euro start off there in the realm of Euro USD, obviously a hot area out there. Pretty strong volume week this week as well, about a third overall increase in open interest from previous weeks. So not surprisingly, things are rocking and rolling out there. Also not surprisingly, the very, very front portion of the curve leading the charge, about 60% of last week's action lighting it up out there from a Euro USD perspective, all in the front August term. Again, that makes sense. That's where the Brexit vote's going to happen. So if you're going to be playing out there, you're not going to be playing 2 years down the road. You're going to be playing right now. Also, interestingly, and Nick, the big hot strike out there, the AUG at 1090 puts. Those are leading the charge, nearly 16,500 contracts. So read into that what you will, what that intuits for the outcome of the Brexit vote. But clearly the early polling driving a lot of front term and indeed some downside action out there in Euro USD. Anything else catching your eye before we move on to the pound itself?
Let me see the Euro. Yeah, so I think what's probably most interesting to me after having a look at this is that you're starting to see the weeklies come into play here a little bit. And you and I have spoken quite a bit about how the CME offers weeklies on a majority of their products, especially the very liquid ones like the FX and the crude and that kind of thing. We see it really popular in the treasuries, but we're seeing a big bump here in the volume and the open interest in the weekly stuff. And interestingly enough, the week 4 contract, which expires in 14 days on the 24th, people are going to be able to make. I'm really interested to see how that trades as we approach Brexit, because the open interest is up about 37-40%. The volume is up across the board on all the weeklies, but there's going to be a lot of that's almost like a binary option when it comes to that 1 day left when we start to get toward the 23rd. So it's going to be really fun to see how in that week 4, and when we start talking about the pound, we'll take a look and see how those weeklies are doing. But yeah, definitely an increase in the open interest in those, and I think people are going to start looking. That's the whole point of these weekly contracts, is looking at the dates and seeing if they match the events that are taking place in the market, right? Because really what you're coming down to is you're getting a chance to kind of get, it's easy to get long a cheap option and make a play for it and see if something good happens, right? I mean, obviously, I don't think a lot of people are going to be, well, you could be selling those if it goes the other way or somebody gets an inkling of what's going to happen, but a pretty good way to, take advantage of some activity in that market itself.
Yeah, it's one of the things that's always fascinated me about the weeklies on the futures options side, more so than the equity and index options side, which is where we typically hang our hat on a lot of our programs here, which is, on the equity and index options side of the fence, it's just 70, 80, 90%, depending on the product, is just premium selling, harvesting that theta decay. And on the futures option side, we see a much more, I hate to call it nuanced, but a much more nuanced approach. People actually buy these things, and they buy them, they actually use them the way the weeklies were initially intended, which is to provide some sort of hedging or protection around some very specific risk, like an earnings event or a crop report, or in this case, a Brexit. So whatever that event risk may be, the earnings were designed to hedge around that. You don't want to buy a whole week, or indeed a whole month, not a whole month, I should say, of premium to hedge for 1 day or a couple of days. You want to buy a weekly. And so that's kind of where the use case is. And I'm sure if we dove into a lot of that paper, Nick, we'd see that it was probably fairly two-sided, certainly more so than you'd see in, let's say, I don't know, let's go out to Facebook or SPY or whatever, pick your poison apple on the equity and index side, and you'll see a lot of that weekly premium leaning towards the dark side. Speaking towards the dark side, let's move over to the great, GBP USD pound US dollar stuff. Also interesting stuff. Again, kind of a similar narrative to what you were saying before there, Nick, with that very, very front kind of crazy portion of the curve. That weekly is into August and stuff is really kind of leading the charge with about 78% of the overall volume going up out there in that time frame out there. Yeah, about 78% of that volume. Also a huge jump up in open interest this past week, about 40% increase out there in the August in that front portion kind of time frame. So the near portion of the curve, again, just lighten it up. And the strike lighting it up out there. The 1.411 or 41, puts. About 2,800 of those bad boys lighting it up this week. Overall open interest also up about a quarter this week. So again, this is where the action is right now. Very front portion of the curve out here in the pound USD and euro USD, really lighting it up. Again, that vote June 23rd. So I got to imagine we'll be talking these kind of numbers again next week, if not more. Nick, do you agree?
Yeah, I think that, looking at it, the volume could be a little bit better in this currency in and of itself. But, again, noticing if you're looking at the report while we're having this conversation, the skew's still big time and even more so to the put this week. So like almost 3 vol higher, meaning more negative to the put than it was when we started this week. So, the trade in the future itself has generally been pretty flat. No change in really the at the money strike this week. A little bit of, the futures are down a little, but still big bids in the put side. And really, can I jump into a question that you had us talk about a little bit in terms of?
We'll mix segments. Go for it. Sure. Why not? We'll mix it up.
Should we mix it up a little bit? Well, I'm just saying, you see this, right? You see that the puts are getting bid here, even again this week, 2 and 3 vols. That's quite a big jump. And people say, well, how do I take part in this Brexit? What kind of options can I trade? Now, obviously, you can go out there and buy puts if you think things are going down. But another way to keep to participate in this downside is, if you looked at the curve, it's basically a slice from the top left to the bottom right? The puts are real bid and the calls are offered. But like we've talked about last week a little bit, calls are offered. You can buy those very cheap from a vol standpoint. And if there is a Brexit and the currency does break further, then, if you bought that call and hedged it, you can really participate in that downside, but you're covered on the upside because you bought a cheap hedged call. If something happens where they, when they don't leave and the market does rally, you bought something cheap, you're hedged, you can probably get out of it fairly easily. But if by some chance, they do leave and the market tanks, now you're long a call, you're short futures, you can get out of your futures and you're long a call basically for free, just like we talked about last week. So there are some opportunity there, especially when you see the curve so I won't say out of whack, but so skewed like it is right now, because that's usually when you see some volatility trading opportunity.
Since you're skipping ahead, I'll give our listener here some love who sent this question in. The question came from Jim Duggan. He asked, FOMC and Brexit are approaching. What are some good ways to use options to play the Brexit or the FOMC? That's exactly what Nick just alluded to. We've seen some interesting shapes and some skew shapes in particular lining up in some of these products. And again, the weeklies are just all sorts of crazy out there. So that's been interesting stuff. If you too have a question, particularly if you're streaming live, it's probably the best way to get them in right now because for this week's show, anyway, hit us up via the Mixlr app. You can use the chat function there to hit us up via Twitter or Facebook. If we get some live ones in, we'll make sure we get them in. Otherwise, we got a bunch of people have already sent them in. If you're listening after the fact, don't worry, we love you guys too. Send them in via the usual ways at the website or twitter.com/options, questions at theoptionsinsider.com, or it's all baked into the mobile app as well. We'll get to you really quick. But before we get to some more questions, Nick, let's hit on those crazy beans. If you had told me again, I think I mentioned this last week again, but if you had told me when we were first you and I were just concocting this show in the deep, dark recesses of our brains that we talked this much about the magical product category known as soybeans, I would have laughed at you and said you were a crazy person. And here we are a few months later, and We're talking magic beans, all things magic in the realm of beans. The beans are like, forget Brexit, forget FOMC, we're where the action is. Come look at us. Hitting new highs again this week. We got all that kind of influx of the old crop and new crop kind of bumping into each other there, which is always fascinating, I know, for a lot of particularly our traditional retail equity and index options traders, and a lot of pros as well out there who don't play in the grains and the ags that much. There's all this old crop, new crop kind of planting season stuff. It's kind of new to them, so it's always kind of fun to break into that stuff. But yeah, I know we were looking at a lot of interesting volume. The beans have been lighting it up. Nick, I know you've been kind of really diving deep into this. I'll let you run with it. What's catching your eye out there in that just nonstop gift-giving product category known as soybeans?
Yeah, one thing I wanted to mention, we didn't really talk about it last week, and again, it's sort of my I would say naivete is the wrong word, but just sort of my newness to the market, because what happens is they do watch like an old crop, new crop future spread. And last week it got completely out of whack. And I'm sure a lot of people, and even on the guys that I follow on Twitter, there was a lot of talk about how crazy it was. And it hit a settle low of like minus 62, right? Where you buy in the back and sell in the front, and you were getting a credit of 62 cents on that spread. So in prior to that, it had been trading like minus 9, minus 10. So it hit minus 62. It traded quite a bit below, probably it was into the second and third standard deviation over the course of the last month or so, and even further out than that. So that's something I wanted to mention. So another thing to keep track of when you are starting to look at the beans is this old crop, new crop future spread, because that's a trade in and of itself for a lot of guys that are out there. So it's kind of pushed back to where it was just prior to where the rally started 4 or so weeks ago. But just another note of something to keep an eye on, or another trade potentially, because there's some real activity out there in that future spread as well. Like you said, Mark, there's new highs again this week. I mean, today we come off where we're pretty much flat to up a little bit, depending on where you're looking at on the curve. We mentioned as part of the spread, so the new crop kind of caught up to the old crop in terms of the pricing again. We had a brief spike this morning over $12 and then back to the opening level. So I wasn't around when that happened. So it would be interesting. I think it might have been prior to there was a USDA report today. So maybe something spooked somebody at that point. So there was a little bit of a rally, but then it came right back off. So, and then with that, there was quite a bit of activity, and you see it on the report itself. A lot of volume in the 1,200 calls. So I believe that was distributed throughout the week, but we could probably I could take a look at it. Let me see where it came from today. Yeah, so it was pretty well distributed throughout the week, but almost 34,000 traded in the new crop or the November contract for the 1,200 calls. So another report comes out. The beans were, I think it was generally, I don't think it was bullish or bearish. It was kind of an agnostic report for them. I know it was bullish for the corn and bearish for the wheat, but you see that spike, see a lot of trade in the upside, a lot of opening in those upside too, but also at the same time, a lot of increased open interest in the downside calls. Sort of, I think people are starting to come into the market at these different points where rally points and sitting around, then we rally away from that. So you're starting to see sort of right now a little bit of a barrier, right? Or you call it a collar. I got a lot of 1,100 puts out there across the board and a lot of 1,200 calls. So you can see all this stuff on the report itself, and kind of get a good idea of what's trading and where the high marks are, and make sure you take a look at the data display settings too, because you can switch that most active to the call or the put, or the most active between the two. So just keep that in mind when you're taking a look at it. And I guess the other thing to point out there is, there was big open interest gains in both the August and September contracts as well. So again, starting to move, that July is moving inside of 2 weeks. So more people are coming into play in the other contracts that are old crop contracts, as we've been calling them. And just another general increase in open interest. So more people are coming into the market trying to take advantage of it as well. So some pretty interesting things by the numbers, right? So if you're a bean trader, you're probably seeing these things and understanding them. But if you're new to it, there's some opportunity to find some places to trade. And then the one other kind of eye-catching number is the decrease in the 1,100 calls in the November contract. So got 12,000 down in open interest. So a number of things could have happened. That was like 30% of what was out there. So maybe people were rolling calls up and going from the 1,100 to the 1,200 as they saw the continued rally. So that's what we're seeing right now. And then the other thing probably that's again interesting when you're seeing a market that's on a continued rally here, the put call ratio is pretty flat in the front month, but still a bias towards the calls in the August, September, and the new crop November. And November, you might have mentioned this already, but that's like 50% of the options volume that we're seeing so far this week. So a lot of good stuff. I mean, if nothing else, the TWIFO, it gives you an opportunity to go out there and look at the market and sort of get comfortable with what it's doing over the course of the week. And as I mentioned, you can go back and look at a week prior and then 2 weeks prior. So some good numbers out there, some good ways to get educated about a market if you're thinking about starting to trade in a particular place, right? So that's what we have for today.
Since you're talking, calls, rallying, we usually wrap it up here, half an hour show, but we're having so much fun. Listeners are having so much fun. People keep piling in. Let's just do a couple more because it is fun. Of course, we can't wrap up without talking the shiny stuff as well this week. Of course, FOMC and potentially Brexit could have some impact on that. We've seen, of course, weakening dollar as well, kind of leading to a nice little rally in the shiny stuff, aka gold. I haven't really talked silver or platinum that much on the show yet. They haven't really been lighting it up as much as we have seen out there in the gold land. And of course, the jobs report last Friday also setting gold off to the upside. And of course, all this upside, not surprisingly, we're seeing a lot of love on the calls. The call skew definitely swinging this week in favor of the upside. Not as rich as it was back in February, where 1 by 2s, buy one, selling two were kind of the order of the day. You can do those almost for credits. It was so rich, but still very attractive out there. And also looking at what was lighting it up this week, again, probably as a result of, FOMC and all the things that are we have all these events, Nick, kind of just stockpiled here at the front end of the curve. So no surprise, the big gold options over there on NYMEX are COMEX actually, are lighting it up to the near portion of July. Again, early July, lighting it up here with about 40% of overall volume this week. Coming in that one chunk, I should say, 1,300 calls, leading the charge there with nearly 9,000 or so contracts. Again, that goes back to what we were saying before about calls kind of fighting their way to the forefront. Ironically, the biggest open increase. Easy for me to say today. You can tell I've been doing a few shows today, Nick. TWIFO, usually one of the last shows on my calendar for the week, and my voice is running out. But I got a few more in me. The September leading the charge here from an open interest gain perspective, about 15% or so out there. And overall, open interest up slightly, about 4%. So we're not seeing the mega gains we're seeing out there, and let's say we saw in the in the pound USD. But again, those are smaller volume products too. It takes a lot to move the needle out there in gold. Doing about let's say about 20, decent number of contracts out there this week, about 125,000 contracts out there this week. Anything else catching your eye out here in the realm of the shiny stuff, Mr. Nick, before we wrap it up for another exciting week of TWIFOing?
I think the one thing I'd like to point out is if you take a look, anybody who's watching or following along, you see that the risk reversal or the collar or whatever you want to call it, the squash, the combo, you'll see that again, the skew is up bid to the call side. And prior to this week, we were seeing that was coming off again, meaning it was starting to flatten again, where it was almost to the point of being even calls, puts were even volatility. But I think what I'm finding most interesting about that is that as I start to watch more of these over and over again, and it could be obvious to people that already are watching these markets, but to me it's new because Mark and I are trying to cover more and more of the products. there's really some skew trade here available in the gold because it's really, really tied to which way the market's going. So if you have any inclination one way or another, and you feel things overpriced or underpriced, or whatever, you can. There are some vol trading opportunities here, I believe. So we saw another rally come back here, and again, it's sort of an atypical thing, right? We're seeing vol up for the week on a rally, which after we saw vol down on the break, and in usually I would tend to think you're coming back into a place where the future has been before, so the vol would come off again. But I think with the bad news on the jobs report, like you said, the weakening dollar, people are coming back in here and thinking there might be a continued rally here in the gold, especially given that, we're seeing a lot of upside buying in all of the months, in the July, the October, as well as the November and the December. Most of the high volume for this week is in calls that are quite a bit out of the money at this point. So that's what we're seeing right there. And as you said, always good. All the products that we've talked about have increased open interest, which again just lends itself to the ability to get in there and trade. And keep in mind, again, this gold, they do have weekly options. I'm taking a look now to see what the volume looks like on those. But I think as you're going, there's not great volume there. But again, I think it's one of those things. As this commodity comes into play for specific events that are out there, you're going to have an ability to almost trade, like I said before, like a binary option in these different commodities.
Since we're hitting commodities, people seem to want it. Nick, should we go a few more minutes and do a really quick rundown on crude? People seem to want some crude in their lives this week. Should we do it? What do you think?
Yeah, that's fine. That's fine. Let me see what I can see there. I didn't look too hard at that before the show, but let me see what we got out there.
What fun is preparing, Nick? Let's just do it on the fly, the way that people want.
Well, that's sort of like we talked about. That's sort of the point.
It's like live theater here, a little improv action in our lives. I'm going to race you to see who can pull it up. Who can pull it up first?
I pulled it up. I think the one comment that I would have here, if you start to look like, July again is coming off the board. At the end, well, it's got 6 days left. A lot of trading in the 52 calls there. There was a high volume there, but sort of a even put call ratio for that front month. So I think there's just a lot of trade, a lot of back and forth. So again, you get a market that's choppy with not a lot of days to expiration. There's going to be some ability to trade in and out of things, especially if the future's moving, and the future is moving in the crude. And then outside of that front month, you see a lot of, as you're seeing too, right? We see a lot of put volume. And but again, you see a lot of put volume, and you're seeing the put call ratio where the puts are greater or much greater than 1. So that means there's a bias toward that as well. And you're also still seeing a skew where it's a negative skew, where when we do our skew, it's call minus put. We're seeing a negative skew, so puts are still bid to the calls, and that's kind of typical here. But a lot of put buying out on the curve, a lot of trade in general on the July with some upside call buying in the 52 strike. And I think if you go look at the charts over the last 3 weeks, you got about a 48 to 52 price range. So you're going to see, again, you start to look at these short-term ranges, you get some ideas in terms of what you could potentially trade or what you think is going to happen. But, you can also look at what the volume activity is and see where people are kind of thinking the upside and downside are. That's why I would recommend that not only look at the TWIFO report, but go out there and look at the open interest profile tool on the CME, so you can see where sort of the big barriers are from a price performance strike price standpoint, so you get an idea of what people might be thinking the range might be over a period of time.
Yeah, the big most active name, 50 handle puts in August. Not surprisingly, we've been kind of vacillating around that 50 handle. Has been a lot of push and pull as to, will it hold? Will we continue to rally? Is this the start of the bulls coming back into crude, or are the people who've been bidding up the downside, the 40 handle, 30 handle puts and things? Are they perhaps? Do they make more sense? There's been a lot of head scratching about why crude perhaps didn't sell off last week on the news. Some of that news coming out of OPEC, but c'est la vie. Maybe we're seeing a little bit of a different range here for the product, but you're right, we're seeing a more of a what would line up as a traditionally investment type skew you'd see in an equity or index option, where the puts have some juice. The calls traditionally not so much. They're a little bit richer now with some of the run we've seen over the last week into this week. Some people buying up some calls in the near portion. In fact, if you look at the very, very front portion of the curve, which is where a lot of the action was this week, about nearly half, about 44% of the volume going up in that portion of the curve this week. That's almost a straight up smile, Nick, like you see in a lot of other commodities where the puts and calls calls are kind of equally bid. It's a bit of a crapshoot on that 50 handle right now out there. So kind of interesting stuff as we wrap up crude. We're going a little long here, Nick, but it's been so fun here in the chat room. Wow, the chat's just exploding. We got a lot of people loving up the show. I appreciate you guys tuning in. We do this show every week, streaming it live on Friday, 3 p.m. Central, 4 p.m. Eastern. If you can, join us live. Looks like a lot of you folks are doing just that. We welcome you. Come on over. It's Mixlr, MIXLR is where you get the chat link. You don't need an account just to stream it. If you want to ask questions, you need an account. But you can also hit us up. Twitter.com/options, Facebook.com/theoptionsinsider, or on Stock Twits, we're Options Insider. And if you send those questions in via that platform, you can kind of lurk in the Mixlr chat room and then send us questions the other place. You don't need an account, so don't worry about it. You can also get it on any platform of choice. And of course, we welcome all you guys, most of you who like to listen after the fact as well, all the thousands of you who download us via iTunes or TuneIn or Stitcher or wherever you get our stuff, even our website. And of course, don't forget to follow Mr. Nick over there on the Quick Strike platform. And before we go, Mr. Nick, why don't you tell our friends here what's cooking in the land of good old Quick Strike and what's coming down the pike? Ooh. Theme's hot there this week. Let's turn that down a little bit. What's coming down in the pike over there in the land of all things Quick Strike, Nick?
I think keep an eye on the CME Group website because we'll be releasing some new reports here in the next couple weeks, having to do with like volume and open interest, and we might try to enable some of the cells in the TWIFO report so you can get a little bit more detail. But I think. If you're liking the show, follow us on Twitter at QUIKSTRIKE1 at QuickStrike1, and we do tweet out TWIFO during the week. Some report pages. We do other stuff as well in terms of maybe vol term structures, that type of thing. But and keep the questions coming. It makes us work hard, and it's really sort of fun to answer the questions and to try to satisfy the listeners out there. But keep an eye on the CME Group website for the free stuff. That's the place I point most people right off the bat.
There you go. Check it out. CMEgroup.com/TWIO, TWIO. Keep it lowercase for some strange reason. Otherwise, it won't work. And you can get all this cool data that we're talking about. We'll also try to put some links to PDFs and things in the show so you can see exactly what Nick and I were referring to at the moment of the show. And again, we record it every Friday, 3 p.m. Central, 4 p.m. Eastern. If you are so inclined, we'd love to see you there in the chat and following along. Hey, send us your questions, your comments. We love to hear from you guys. And we'll see you next week right here on This Week in Futures Options.
This Week in Futures Options is brought to you by Quick Strike, options pricing and analysis software. Quick Strike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. Quick Strike has you covered, with market data reports ranging from open interest to the term structure of volatility. Quick Strike is the perfect addition to your trading toolkit. Learn more about Quick Strike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QUIKSTRIKE1.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.